I think the 20th century banking networks get transformed. The 20th century credit networks get transformed. The 20th century equity capital markets get transformed. Bitcoin becomes the foundation of the 21st century digital credit, digital equity, digital banking, digital capital, digital economy. And Bitcoin treasury companies are the engines, the drivers, the dynamos powering up that network. And you know, the experimentation is extraordinary. There's a Cambrian explosion of ideas. You know, the way you do it in South America is different than the way you do it in North America. And at some point, Bitcoin will find its way on the balance sheet of insurance companies. And it'll find its way on the balance sheet of actual banks and tech companies. And, you know, and if you start to reimagine insurance, you know, powered by Bitcoin, it's a different world, right? Better insurance and reimagining bank accounts powered by Bitcoin. What happens when your bank offers you a money market that's not fiat powered, because the fiat powered money market would pay you 420 basis points right now, but a Bitcoin powered money market would pay you 10.2%, 1,020 basis points right now. So as banking gets reinvigorated and as insurance gets invigorated, and when the Apples and the Googles are, you know, custodying and offering Bitcoin via all their rails, then you've got a digital transformation it's an invigoration, and we start to reach a digital economy which is smarter, faster, stronger, 10x better, 10x more productive, maybe 100x more productive. And the people that are in that economy win. And the people that are blocked from that economy look like the North Koreans, where their lights go out at night. You know, they get locked off the power grid. And hopefully, it'll be such a compelling future that no one will want to be locked off the grid. Your choice is to be smart and fast and strong and rich, or you could be stupid and slow
and broke, yeah,
and weak and poor.
Yeah.
So I see the end game as the credit markets are reinvigorated and digitally transformed to be backed by Bitcoin, digital gold, digital capital. And I see the equity markets are reinvigorated because the equity indexes all start to hold these companies, right? We creep into the equity indexes. Metaplanet gets into the equity indexes. And then pretty soon, all these companies in the S&P 500, they all have Bitcoin. The end game is get to $1 trillion of collateral growing 30% a year, be issuing $100 billion of credit a year, growing 20, 30% a year. And that credit is yielding 200, 300, 400 basis points more than all of the real estate backed credit, the corporate backed credit, the fiat backed credit, or any other type of credit instrument in the world, right? And what's going on there then is you reinvigorate the credit markets. Instead of people having a credit, you know, they're sick in Switzerland, right? Instead of getting zero in Switzerland, you know, if someone is issuing, if half the credit in Switzerland is digital, then the zero goes to 200 or 300 basis points. And because it goes to 300 basis points, maybe the risk-free rate goes up and financial repression becomes less common and more difficult, right? You're actually improving the traditional credit markets, and you're offering Bitcoin believers something 3% better. Same thing in yen, right? Eventually, instead of trillions of dollars yielding 50 basis points, the average blended yield will go to 300 basis points or 400 basis points, and you return health, you know, and integrity to the credit markets everywhere in the world. And it's done by some combination of Bitcoin treasury companies working in concert with each other, right? The Bitcoin network becomes a multi-$100 trillion network. The amount of digital credit, 10 trillion, 20 trillion, 100 trillion. right? What if there's $100 trillion of digital credit and hundreds, by the way, 100 trillion in digital credit backed by 200 trillion worth of digital capital would be not fractional banking, right? You haven't got to 1-to-1, you're still 2x over collateralized, which would be better than the very best AAA corporate investment grade debt in the United States is like 2.5 times or 2.5 times over collateralized. So it's all AAA investment grade, but with more yield and more transparency.
Do you anticipate in that sort of future strategy being in a position where you might extend Bitcoin credit to institutions, distressed institutions or sovereigns at some point in the future?
Yeah, well, when we sell credit, we don't buy it. Okay, so when you say extend credit, we won't be making a loan to them. We will be offering them our credit instrument. So if you're a nation state and you want 10% yield, you'll buy our credit instead of buying something that yields 3%, right? We will sell the credit, create the credit, right? And I think our view is we want to create, not 10 billion, but 100 billion and then $1 trillion. And then trillions of dollars worth of credit backed by digital capital.
We talked a little bit about the different types of treasury companies, the pure plays versus, companies that have a significant operating business. What trends haven't you seen that you're anticipating, or kind of what's the alpha here? What should companies continue to experiment with that you think would be effective?
I think that there's an opportunity for crypto exchanges to be more aggressive adopting a Bitcoin treasury strategy. I think we might see that. I think we could see more adoption from the Geminis of the world or the Blocks or the Coinbases of the world, because they're now publicly traded entities in the capital markets. And so you might see something interesting there. I think insurance companies, especially public insurance companies, could start to embrace digital capital. And they have a lot of capital to invest, and so they could move their own balance sheets, or they could start to change the way they operate. I think there are a lot of financial players that are innovative. The Apollos, the BlackRocks, the Blackstones of the world. They're publicly traded, so you would wonder if you're BlackRock and you just had the most successful ETF in history, maybe you might want to hold some Bitcoin on your own balance sheet. Right? And take advantage of that. So I think you'll start to see more interesting credit instruments or equity instruments created by financially sophisticated players in the crypto economy. And if it doesn't come from the big players that are established right now, then you'll see the smaller startups, the pure Bitcoin treasury companies, they'll get into the space because there's a vacuum.
Yeah.
Just like Coinbase is filling a vacuum left by traditional banks because the banks don't want to custody Bitcoin, so Coinbase has got the ability to fill it. If the insurance companies or the crypto exchanges don't embrace Bitcoin, well, then you'll see smaller startups like a Strike or something that will embrace it, right? And if you go public and you start to raise a lot of capital and then you build it into your wallet or you build it into a credit offering or something, then I think that could be compelling.
Yeah. So as things kind of continue to play out, the game theory is interesting. It's compelling. How do you think about the future when it comes to maybe consolidation or M&A opportunities with Bitcoin treasury companies in a significant drawdown? Is strategy sort of the buyer of last resort in these scenarios?
I expect Bitcoin to go up 29% a year on average for the next 21 years. Right? I'm expecting $21 million Bitcoin in 21 years. So I expect Bitcoin to appreciate 21% a year thereafter. The risk-free rate is 29%. If I do nothing, take no risk. If you're in the Bitcoin network, every single investment idea you consider has got to return more than 29% plus a risk premium plus another premium for the headache. And even if you did that, there's a diversification discount. And the thing you got to keep in mind, and when you're running a public company, is there is a diversification discount. If people look at my company and they say 100% of the risk and 100% of the return is levered to Bitcoin, it's a very easy business model. You can go to our website, you can crank in the Bitcoin volatility, the Bitcoin ARR, the Bitcoin price, and it spits out the risks, the fair credit spread, everything. It's very simple. You can update it every 15 seconds. If we were to go and buy another company, buy X billion-dollar company that we think was 40% undervalued, now it takes like an hour for someone to figure out whether that's right and wrong, and it takes 10 years for them to know we were right or wrong. Okay, you've just created a diversification discount. You've turned something which was transparent, where I know exactly what I'm getting in 15 seconds, to something where if I believe you after an hour, maybe it's better. But how many ideas do you have that are guaranteed to return 40% a year for the next 20 years?
No.
Like I've never seen a public company that ever did an acquisition that promised 40% return every year for 20 years, right? So when you think about Bitcoin, the right way to think about it is you're a public company, you have $1 billion of capital, you have an option. You could go buy $1 billion of Bitcoin at 1 times revenue, and it's growing 55% a year.
Mm-hmm.
You can buy something growing 55% a year at 1 times revenue.
Right.
And all of your investors already understand it and support it. Long term, you can buy something that's going to grow 29% a year, no risk, no integration headache. You can buy something growing nearly 30% a year at 1 times revenue, and all of your investors back it. Right? There's no one holding our equity that doesn't believe in Bitcoin, you see?
Right.
They're all Bitcoin maximalists.